welcome to 3.0 TV. I am Vishakha Thakur. Stablecoin transaction volume hit a record $1.8 trillion in February, signaling growing adoption of digital dollar-backed assets. Well, data from Allium shows that USDC accounted for the majority of the activity, with transfer volumes reaching $1.26 trillion. So this marks a major milestone for the stablecoin since its launch in September 2018. Now, meanwhile, Tether's USDT recorded $514 billion in transfer volume during the same period. Stablecoins, typically pegged to fiat currencies like the US dollar, are widely used for trading, payments, and liquidity across multiple blockchain networks. Now, the surge highlights increasing institutional and market usage of regulated stablecoin alternatives. Florida lawmakers have approved a state-level framework to regulate payment stablecoins, moving Senate Bill 314 to Governor DeSantis for final approval. The bill expands Florida's money services law to include stablecoins and requires issuers to comply with existing financial regulations. It also prohibits the issuance of stablecoins without proper licensing. The legislation passed unanimously in the Florida Senate after earlier clearing the House, and according to Samuel Arms of Florida Blockchain Business Association, the bill is expected to be signed into law within the next 30 days. Also, the move reflects growing efforts by US states to establish clearer rules for digital asset payments. Canada has successfully tested blockchain infrastructure for bond markets through a pilot project called Project Samara. The initiative involved the Bank of Canada, Export Development Canada, Royal Bank of Canada, and TD Bank Group. As part of the trial, Export Development Canada issued a $100 million Canadian bond with a maturity of less than 3 months to a close group of investors. Well, the bond was issued, traded, and settled using distributed ledger technology, while payments were processed using wholesale central bank deposits. The pilot aimed to evaluate whether blockchain-based systems could make bond issuance, trading, and settlement more efficient. US Senator Elizabeth Warren has urged lawmakers to include strong anti-corruption provisions in upcoming cryptocurrency legislation. Her remarks follow the Securities and Exchange Commission settlement with Tron founder Justin Sun. So Warren criticized the regulator for allegedly giving Sun a free pass despite his significant investments linked to Trump family's crypto venture, World Liberty Financial. Sun reportedly invested around $90 million through token purchases tied to the platform, and the SEC settled a separate case against Sun and his companies for $10 million, while Warren argues that future crypto regulations must address potential corruption risks within the rapidly growing digital asset industry. Asset manager 21 Shares has launched the first spot Polkadot exchange-traded fund in the United States. The fund, trading under the ticker T-Dot on Nasdaq, allows investors to gain exposure to Polkadot without directly holding the cryptocurrency. So according to Bloomberg ETF analyst Eric Balchunas, the ETF debuted with an initial seed investment of $11 million and carries a management fee of 0.3%. The spot crypto ETFs track the price of underlying asset while removing the need for investors to manage digital wallets. The launch marks another milestone in the expansion of institutional investment products tied to alternative cryptocurrencies. Publicly listed Bitcoin mining companies CleanSpark and Kango and BitFuFu produced nearly 1,250 BTC in February, valued at roughly $86 million at current prices. Well, CleanSpark led production with 568 BTC while operating at a peak hash rate of 50 exahashes per second. So the company ended the month holding 13,363 Bitcoins on its balance sheet. And CleanSpark also sold 553 BTC for about $36.7 million at an average price of $66,279. The firm expanded its operations by acquiring a second Texas campus, adding 300 megawatts of power capacity. So many mining firms are now exploring AI and high-performance computing infrastructure as new growth opportunities. Prediction market platforms Kalshi and Polymarket are reportedly considering new fundraising rounds that could value each company at around $20 billion. So according to the Wall Street Journal, the discussions with investors remain at an early stage and may not necessarily lead to completed deals. So Kalshi was last valued at about $11 billion after raising $1 billion in December from investors including Paradigm and Sequoia Capital. The potential fundraising comes amid growing scrutiny of prediction markets following controversial trades related to possible US and Israeli strikes on Iran that raised concerns about insider information. Dubai's Virtual Asset Regulatory Authority has ordered crypto exchanges MEXC and KuCoin to stop online license operations in the region. The regulator warned that several entities operating under the KuCoin brand do not hold the required license to offer virtual asset services in Dubai. Savara also cautioned investors that being unlicensed platforms could expose them to financial and legal risks. And Dubai has been positioning itself as a crypto-friendly hub, as we all know, but requires firms to comply with strict regulatory standards. In October 2025, Bara fined 19 companies for conducting some unlicensed crypto activities within the jurisdiction. South Korea's Financial Services Commission is considering excluding dollar-pegged stablecoins such as USDT and USDC from upcoming corporate cryptocurrency trading guidelines. The proposal aims to prevent excessive or indiscriminate investment during the early stages of the market. So under the current Foreign Exchange Transactions Act, stablecoins are not recognized as a valid means of external payment. Although there have been efforts to amend the law to include stablecoins, those changes have not yet been approved. And local companies had requested permission to use stablecoins to hedge exchange rate risks and also speed up international settlements. Prediction market platform Kalshi is facing a class action lawsuit over alleged disclosure failures in a market predicting the removal of Iran's supreme leader Ali Khamenei. So plaintiffs claim the platform did not clearly disclose a death carve-out rule that affected payouts. According to the lawsuit, the policy was not properly included in the user-facing rule summary and was not displayed clearly enough for users to understand its impact. The complaint also states that Kalshi later admitted the earlier disclosures were grammatically ambiguous. So the case highlights growing legal scrutiny of prediction market platforms and their transparency with users. That's all in the bulletin today. Keep watching 3.0 TV for more such updates and do log on to our website www.3versetv.com or scan the QR code.